If you're a senior who worked hard your whole life and still has a bank account, property, or pension back in your home country, this video could save you thousands of dollars. The IRS just rolled out major changes to foreign account reporting rules in 2026, and if you're not up to speed, you could be facing penalties of $10,000 or more, even if you did absolutely nothing wrong. My name is Michael, and here at Michael Visa Guide, we cover exactly these kinds of issues, the ones that affect immigrants and seniors the most, but that nobody explains in plain English. So today, I'm going to walk you through exactly what changed, who it affects, and what you need to do right now to protect yourself and your hard-earned money. Let's start with the basics, because a lot of people still don't know this rule even exists. The IRS has always required U.S. citizens and residents to report their foreign financial accounts. Always. This isn't new, but here's the reality. Millions of seniors have no idea this requirement applies to them. Maybe you came to America 30 or 40 years ago, and you still have a savings account back home. Maybe your parents passed away and left you some money in an overseas bank. Or maybe you're receiving a small pension from the country where you used to work. Whatever your situation is, if the combined total of all your foreign accounts exceeds $10,000 at any point during the year, not just at the end of the year, at any point, the IRS wants to know about it. And with these 2026 updates, they are cracking down harder than ever before. Here's what that actually looks like in real life. You came to America decades ago. You built a life here, raised your family, paid your taxes, did everything right. But back home, you still have an account with maybe $15,000 or $20,000 sitting in it. Money you're saving for emergencies or planning to leave for your grandchildren. You never thought much about it because it's just sitting there. You're not hiding anything. You're not moving money around. You're just a person with a savings account. But every single year, you are legally required to file something called an FBAR, a foreign bank account report. And if you don't file it, even as an honest mistake, the penalties can be absolutely devastating. Now here's what changed in 2026 that makes this more serious than ever. Before, the IRS had some flexibility when dealing with people who simply didn't know about this requirement. They could look at your case and say, okay, this person wasn't trying to hide anything. They just didn't know. But that flexibility is gone now. The IRS has made it officially clear. Ignorance is no longer a valid excuse, and they've strengthened their enforcement tools significantly. They're doing this through something called FATCA, the Foreign Account Tax Compliance Act. Under FATCA, banks in over 100 countries are now legally required to report information about accounts held by U.S. persons directly to the IRS. So even if you think nobody knows about that account back home, they do. The IRS has access to banking data from around the world, and they're using sophisticated systems to match that data against who has and hasn't been filing. If you're not compliant, it's not a question of if they'll find you. It's when. And when they do, the penalties are not small numbers. If the IRS decides your failure to report was willful, meaning they believe you knew about the requirement and chose to ignore it, the penalty can be the greater of $100,000 or 50% of your account balance. You have $40,000 sitting in a foreign bank? You could lose $20,000 of it in penalties alone. That's half your savings gone. But even if the IRS determines your violation was non-willful, meaning you genuinely had no idea, the 2026 rules have made those penalties steeper too. And here's the part that catches people completely off guard. Each year you fail to file counts as a separate violation. So if you haven't been filing for the past 5 years, you're not looking at one penalty. You could be facing 5 separate penalties stacking on top of each other. The numbers add up fast, and before you know it, you're dealing with a financial crisis that could have been avoided with a single form. I know some of you might be thinking, I'm retired, I'm on a fixed income, surely the IRS has bigger fish to fry. I understand why you'd think that. But the IRS does not make exceptions based on age or income. They don't. And I've heard heartbreaking stories from seniors living modestly on fixed incomes who got hit with massive penalties because they didn't know about a reporting requirement. It is devastating, and it is entirely preventable. So let me walk you through exactly what changed in the 2026 updates. First, the IRS has clarified and expanded how the $10,000 threshold works. It applies to the aggregate total of all your foreign accounts combined, not each account individually, all of them together. So, if you have 3 accounts in 3 different countries, each with $5,000 in it, that's $15,000 total. You need to file. And remember, it's the maximum balance at any point during the year. If you had $12,000 in March and withdrew some money and had $8,000 by December, you still need to file because you crossed the threshold earlier in the year. Second, they've tightened the deadlines and increased penalties for late filing. The FBAR is now due on April 15th, the same day as your regular tax return. You do get an automatic extension until October 15th if you need more time, but miss that October deadline, even by 1 day, and you're looking at potential penalties. The IRS has made clear they are no longer being lenient about this. Third, and this is really important, they've expanded the definition of what counts as a foreign financial account. It's not just bank accounts anymore. Foreign investment accounts, foreign retirement accounts, certain foreign insurance policies with cash value, all of it counts. And here's the one that surprises the most people. If you have signing authority over someone else's foreign account, that creates a reporting obligation for you too. Think about that for a second. Maybe you're helping an elderly parent overseas manage their finances. They put your name on their account so you can help pay their bills. You're just being a good son or daughter. But in the eyes of the IRS, your name on that account means you have a reporting requirement, even though the money isn't yours. I've talked to so many people caught in exactly this situation. They had no idea, and now they're scrambling. There are also new rules around currency conversion in 2026. When you report your foreign account balances, you have to convert the values to US dollars. The IRS now strictly requires you to use the Treasury's official exchange rate from the last day of the calendar year. They are actively checking this, so make sure you're using the correct rate. Now let me talk about the most common mistakes I see people make, so you can avoid them. The biggest one is simply not knowing the requirement exists. Many people have lived in the United States for decades and have never heard of the FBAR. Maybe your tax preparer never asked about foreign accounts. Maybe you've been filing your own taxes and it just never came up. Starting in 2026, not knowing is not a defense anymore. The second mistake is thinking that because you already pay taxes on the income from your foreign accounts, you're covered. You're not. The FBAR is not a tax form. It's an information report, filed separately with the Financial Crimes Enforcement Network, which is part of the Treasury Department. Its purpose is to help track financial crimes like money laundering. I know that sounds like it has nothing to do with you, and you're right, but the requirement applies to everyone regardless. The third mistake is waiting too long to get compliant. If you're sitting here right now realizing you should have been filing FBARs for the past several years and you haven't been, do not panic. But do not wait either. The IRS has programs specifically designed to help people in your situation get caught up, often with reduced penalties or no penalties at all, if you come forward voluntarily. The key phrase there is voluntarily. If the IRS finds you first, those programs are no longer available to you, and you face the full penalties. The program you want to know about is called the Streamlined Filing Compliance Procedures. It's specifically designed for people who didn't know they had a filing requirement. If you can certify that your failure to file was non-willful, you file the last 3 years of tax returns and the last 6 years of FBARs. In many cases, no penalties at all. But you have to do it correctly, and you have to do it before the IRS contacts you. That's why I strongly encourage anyone in this situation to work with a tax professional who specializes in international tax law. Don't try to handle this alone. The forms are complex, and a mistake could cost you far more than the professional's fee. One more thing before I wrap up, and this is important. Whenever the IRS makes major changes like this, scammers come out immediately. You may get phone calls or emails from people claiming to be from the IRS, telling you that you owe money right now, or that you'll be arrested if you don't pay immediately. I need you to hear this clearly. That is never how the IRS operates. The real IRS will never call you out of nowhere demanding immediate payment. They will never threaten arrest. They will never ask you to pay with gift cards or wire transfers. If you get a call like that, hang up. It is a scam. And scammers can fake caller ID, so don't trust the number on your screen. If you have any genuine concern about your tax situation, go directly to irs.gov or call the number listed there, or work with a licensed tax professional you trust. So here's where you stand and what you need to do right now. If you have foreign accounts and you've been filing your FBARs every year, great, keep going. But review the new 2026 requirements to make sure you're providing all the information that's now required. If you have foreign accounts and you haven't been filing, reach out to a tax professional today. Not tomorrow, today. You want to get into a compliance program before the IRS finds you first. And if you're not sure whether any of this applies to you, ask. Talk to your tax preparer. Consult someone who knows international tax law. It is always better to ask the question and find out you don't need to file than to assume you're fine and end up with a massive penalty years down the road. And please, share this with someone you care about. Another senior, a family member, a friend who immigrated here years ago and might still have accounts back home. You could literally save someone thousands of dollars just by passing this information along. The IRS is serious about foreign account reporting, and these 2026 changes make that clearer than ever. But with the right information and the right help, you can stay fully compliant, protect your savings, and have complete peace of mind. That's exactly what Michael Visa Guide is here for.